All right, what's going on, guys? In this video, I'm going to be doing a quick trade recap on Bitcoin using the manipulation model. It's been a while since I've done like a raw, uncut, just trade recap and showing you guys my thought process behind this trade, why this trade worked, etc. So let's jump right into it. As always, for proof, I just got to show for proof. You know, I did call this in advance inside of the Pro Discord as well. Let me see. Where did I say that I was long? I post my thoughts every day here. Okay, so wait, that's the take profit. Okay, here it is, right? Scalp long idea. If we get 5-minute inverse here after sweeping range lows, it would be long trigger. This one ran. This one ran very nicely, actually. This was the breakout to new all-time highs. So hopefully, you know, if you didn't fully TP at that high, this ran for like a 15R or something, or like a 16, yeah, like a 20R. So, you know, if you're risking like 1,000, technically you would have made 20,000 if you held it to the peak. Obviously, that's not how we do things, though. We want to take a majority of this trade at the most recent swing high. So let's jump into it, okay? What was my thought process behind this trade? You know, why did this trade work? What were the confluences, etc.? So this is using my manipulation model. Now, what is the manipulation model? Well, I developed an algorithm based on this model. That's our newest indicator in the Easy Algo bundle. But all the manipulation model is catching the very bottom of a swing failure pattern and then waiting for order flow to shift, okay? So to do that, instead of using level 2, level 3 data, you know, like those like hedge fund traders do with those big bubbles on their chart, what we do is use something called inverse fair value gaps. A lot of the time, order flow shifts will be shown on the chart via inversions, right? So what is an inverse fair value gap? Well, I have covered this in many videos, but essentially all it is a bearish fair value gap, right? That we can see right here. So a 3-candle formation where you have 1 candle, 2 candle, 3 candle with that bearish fair value gap in the middle there. Sweeping our range lows here, sweeping our range lows with bullish divergences, and then we're simply waiting for the candle to close back above that bearish fair value gap, indicating to us that order flow has shifted. The bearish order flow has now shifted bullish, and we can look for longs. Now, why did this trade work? Okay, why did this not get stopped out? Well, there are many reasons that this trade worked. Okay, first thing we need to do, okay, if you know nothing about trading, is zoom out a little bit. Right? Go to a daily time frame, go to a 4-hour time frame. You know, all we're doing at this point is looking for general trend and market structure, right? Is our bias for the day bullish or bearish? Now, to me, it was very obvious that the bias was going to be bullish. Now, why is it obvious that we're looking for longs? And keep in mind, this is before we'd broken out, right? So this was like on this candle right here, right? So why is our bias bullish, right? Well, number one, okay, at this point in time, if we go into replay mode, which was like on this candle here, my mouse can work. Okay, we had this all-time high here that we were very close to tapping into. Okay, so this was my external liquidity that I was looking for price to take out. Okay, so I was expecting this level to get tagged. Okay, actually, hold on here. Hold on here. We are way too far. We gotta speed this up a little bit on the 1 hour. Okay, so boom. Right, so I'm expecting this high to get taken out, right? We had like an equal high here. We had that all-time high, and then we had this high right here. So we kind of had like this equal high here, you know, strong liquidity level here. You can say that this high actually got swept a little bit, but I was just bullish based on this candle formation as well, right? Strong bullish candles, breaking structure to the upside. Trend is bullish. You know, a trend bar on the 4-hour on Easy Algo is bullish, right? If we get our EMAs out, I'm not going to take the EMAs out, but all the EMAs look like this, right? We're bullish, we're breaking structure. It's not super difficult to realize you're in a bullish market, right? Again, if you wanted to zoom out to like a daily time frame, you can say, okay, structure on the daily is also bullish, right? We rebalanced this internal liquidity here, meaning we filled this daily imbalance, took out these lows, and now we're pushing up to new all-time highs and beyond, okay? So my bias was bullish. I was looking for longs. I do not want to short a strong market. Bitcoin is showing strength at this point. I do not want to be taking a short. I want to look for a long position, okay? Hence why we took this long. Now, we're gonna let this play again here. Okay, we're gonna let this play. Let's play out. So, boom, another thing I've noticed, right? Okay, that's the, let me remove this for now, okay? So the next thing I noticed, I dropped onto a lower time frame. I see that we're forming this range here, okay? So my bias is already bullish. We've just created a new all-time high, but still I want to look for long positions, okay? So what am I doing? Well, I'm looking for a swing failure pattern. Now, what is the optimal entry when you are trading a range? If you guys have been subscribed to my channel for any substantial period of time, if you've been subscribed for over 3 months, you guys should know that when you have a ranging market, like you see right here, you only look for longs and shorts in one condition, okay? And that is a sweep of the range low and a sweep of the range high. Now, how am I determining what is a range low and what is a range high? Well, all I'm doing is I'm going down to a lower time frame and I'm marking out the most obvious liquidity levels, okay? This is the most obvious pivot point high. This is the most obvious pivot point or structure low. So these are just the very two obvious points that I'm looking at here that I'm waiting for price to take out and then flip the opposite direction. So for example, if price were to come up here, I would look for shorts on a failure of this level. And if price comes down here, which it did, and because my bias is bullish, this is what I was expecting, is a swing failure pattern of this low, a reclaim back into this range for my long trigger. So even before this trade played out, again, I called this inside the Discord saying this is what I'm expecting if price fails this level, which it did. And then obviously I gave the entry live as well. But at this point, I'm not interested in trading this chop right here, okay? I'm not looking for swing failure patterns right here. Okay, I'm not looking for swing failure patterns right here. I'm not looking for swing failure patterns right here because I understand that the liquidity in the market most likely lies, or a majority of that liquidity that needs to get taken out lies below this low, okay? And even higher time frames can confirm that as well. We also had this 1 hour bullish fair value gap that you can see right here, right? We have this bullish fair value gap that needs to get filled as well. So that is why I was looking predominantly at this level right here for price to come down, take out this level, swing failure pattern, boom, targeting all-time highs. We are going to full send. So we're gonna let price play out, okay? And I'll show you guys exactly where I entered because it's easier said than done, right? It's easy to find a winning setup, but it's harder to actually figure out when to enter, right? So I'm waiting. Okay, price still consolidating, no trade, right? At this point, no trade, okay? Even though we took out some of these lows, right? We took out some of these lows. Oscillator looks like it might curl the upside. We're not entering the trade until this major low gets taken out. Okay, so we're waiting. Boom, boom, there it is. Okay, we get that sweep of that low. Okay, meaning price comes down below this low, tags into this 1 hour bullish fair value gap. We are now on alert. As soon as this happens, we are on alert. We had a swing failure pattern of this level. We're looking for longs now. Now, there are two possible entries, okay? The first entry is on that immediate reclaim of that level, okay? So for example, right here, this would be your first entry. However, I like to wait, in this case, for an inverse fair value gap, or an IFEG, meaning I want to see price close back above this bearish fair value gap, okay, and close above to confirm that order flow has shifted. We are most likely going to go back to the upside. Again, now we're combining everything all into one. So we're combining, high time frame bias. We're combining, this 1 hour bullish fair value gap. We're combining the swing failure pattern. We also have bullish divergences on our easy oscillator down here, meaning, momentum is increasing to the upside as price is making lower lows. This is obviously a good sign. So now all we're waiting for is that final piece of entry confirmation, which is the inverse of that bearish fair value gap. Because what I don't want to see happen is for bears to push price lower off of this bearish fair value gap. So even though, I technically would have had a better entry if I just entered on the first reclaim, this is also a higher risk setup because we don't have as much confirmation that price is going to continue to the upside. Another thing I want to point out here onto why I believe this trade worked, okay, is take a look at all of this low resistance liquidity. Okay, so we call this LR. So low resistance liquidity just means equal highs, okay? So we have, this high here. We have the second high here, which didn't take out this first high. We have this high here. We have this high here. So we kind of have this bearish trend line, right? You can call this like a bearish trend line that we're also looking to break out of to the upside. Because again, what moves price? Liquidity. Liquidity moves price. So we understand that at these equal highs and equal lows, this is a strong draw on liquidity, meaning price will most likely gravitate towards, these highs up here. Even if we are to continue lower, we first must take out these orders all the way up here. So just for some more confluence, I should say, that this trade was going to hit our take profit. Again, so all we're waiting for now is that final bullish inverse fair value gap, which we get right here, right? So candle closes above. That was my entry. That is when I alerted it inside of the Discord. I put my stop loss here at these candle wicks or a 5-minute candle closure below this bearish fair value gap, right? So if we get like a 5-minute candle close here, then my thesis is invalidated and I will close the trade. But if my thesis is correct, then I make at least all this, right? So around a 1 to 3 risk to reward. But obviously this one ran much further because we entered price discovery or new all-time highs. But this one followed all the rules, right? Sweep of range low, we had bullish divergence, inverse fair value gap, kind of like a V-shaped reversal here. So this was a really good setup. I'd rate this like an A- setup. I think this sweep and inverse fair value gap could have been done a little bit sooner, kind of a lot of chop on this day. Before we broke out to all-time highs, it was really a weird day. In fact, I think I scaled like 50% of this trade, like right around here. So my risk to reward was definitely not as good as it should have been. I scaled like 50% here, moved stop to break even, and then sold the majority of it at this high. Unfortunately, I took profit before the massive runner to like 118K, but it happens. This was a winning trade, and I think this is just a really good setup explanation tutorial video because this setup is like just really good. Anytime I see this on the chart, I will take it. So again, my stop loss is right here. I'm targeting this high as my take profit. And again, like I said, this day was super weird before we broke out. So you can see that we came below this 5-minute inverse fair value gap. We never closed below though. Okay, we never closed below. And also, a ton of buying pressure at this wick. So at this point, I think I said in the Discord, listen, I'm not a fan of this price action. I wanted this to kind of just explode to the upside, but I'm sticking to my thesis. I'm not scaling half just yet. I'm going to let my thesis play out, which is very important. Whenever you enter a trade, you need to let your thesis play out. You can't get emotional while you are in the trade, right? You need to put your emotions aside, understand the reasoning behind why you entered the trade. If you had a trading plan in advance and you are following those rules, you need to stick to it. So at this point, I was following my rules, letting price play out. At this point, I scaled 50%, moved my stop loss to break even, and then the rest just completely ran. And this is the good thing as well about trading trending markets with strength is a lot of the time, if you're targeting that most recent high in a bullish uptrend, price will just keep continuing to the upside, which is why you want to have at least a 10-20% runner just to make sure that you're capitalizing off as much profit as you can. And obviously, if you were to hold a runner in this would have went absolutely ballistic, right? So that's going to be it for this trade recap. If you guys want to see more of these recaps where I'm just breaking down trades that I've taken and explain to you guys why I took this and why it worked, I can also do this with losing trades as well and show you guys, stop out trades and why it didn't work, that sort of thing. Let me know down in the comment section below. If you guys enjoyed this video, make sure to leave a like, subscribe to the channel for more trading content. If you guys want to get access to my own custom trading algorithms and follow my exact setups and signals on a daily basis, make sure to click the first link in the description below. I'll see you guys next video.